Hey, you guys, Dev here at WeBuyHouses.com. Welcome to a special episode of Cash Offer Masterclass number 50. And I have a special guest today, my dear friend Joel Beal. Joel has been in this business for years. He's got a brokerage. He was with We Buy Ugly Houses, We Buy Houses. He's done hundreds of houses, millions of dollars worth of flips. So, in other words, he's a lot better at this than I am. And I thought, if I invite smarter people to come talk to me, it makes me look smarter. And then I get more subscribers. I think that's how it works. I'm new to the YouTube thing, Joel. Hey, how you doing, buddy?
Can't believe I watched 50 of these, Deb.
You're my only fan.
That's pretty cool.
It is 50. Isn't that amazing? And I kind of dedicated myself to a video a day back at the beginning of September and to start the channel. And I just like looking at houses. I really enjoy it. And I was getting all these emails from wholesalers, and it struck me that I've got a stream of content right here. We could just look at these houses. So we're probably going to look at one together today after we chat a little bit.
Well, Deb, I love these videos. I think it's a great service you're doing. In the real estate business, we meet some really cool, interesting people, but there's a lot of people that maybe aren't as cool or interesting. And, you're not trying to sell anything or push anything. It's just an educational class. And I love it, man. This is the greatest thing ever.
Yeah, yeah. I appreciate that, and I hope everybody else does too. We aren't really selling anything. I mean, maybe someday we'll have a court. Maybe someday we'll go city to city, and do like the hotel thing or something. I don't know. I don't know. I do enjoy introducing people to the WeBuyHouses.com brand, and in a way that's educational, and that hopefully they'll look back and say those guys taught me something, and it was valuable, in me either starting this business or getting better at this business. That's kind of what I hope for at the end of the day. I'm a brand ambassador. That makes sense. All right. So what we were going to do today, our special topic, let me share my screen, and hopefully, I don't know how this looks in the video. My videos are usually done with OBS software that I have over here. So I'm not used to just doing a Zoom call, for the videos on this channel, but hopefully everything looks fine for you guys out there. Our topic today is, I thought if Joel and I were just sitting around, talking, chatting, what would we be talking about? We'd probably be talking about this, our thoughts about real estate in 2026. What are we thinking about? What are we expecting, anticipating about the real estate market in 2026? It's what a lot of people do near the end of the year. They start to think, what will the next year be like? And I think that's a pretty good opportunity for us to stop, here at episode 50 and just say, where are we headed with this thing? I'm going to throw some questions up, Joel, and then I'll let you talk because these people have heard me talk for hours now. I'm sure I'm just droning on and on and on about these houses. But um, this is what I think the questions are that are on our minds right now. Number one, I think a lot of people, Joel, are waiting for something to change in the real estate market. Like they keep thinking interest rates are going to fix everything, or home values are dropping, or whatever. But if we're waiting for something to get better, one of my questions is what's wrong with real estate right now? You and I are. I'm much older than you, of course, but I've seen 6% rates and 6 months of supply and 60 days on market, many times over the years. And whereas people think that's a horrible situation that we're in right now. Um, but obviously, if we think that something's not quite right now, we kind of think about, well, what do we think might change in the coming year? And I think about factors like that would affect affordability, interest rates, home values, homeowners insurance, and property taxes. Because if and I'll say this last point and shut up, let you talk. But it seems like what's wrong with real estate right now to me is affordability. we have an affordability problem in American residential real estate. But what do you think? You think that's it, or what are your thoughts about it?
I have two thoughts, and I'll give them both to you, Dev. As a homeowner, and you and I don't live that far apart. We both live in, West Arlington, Texas, kind of by the lake. As a homeowner, I can tell you exactly what the problem is. When I moved to Arlington, Texas in 1994, the spread between the median income and the median house price was 2 to 1. 2 to 1. That's in 1994. Today, it's 5 to 1. So that's, as a homeowner, that's a problem. And you know what? Thank goodness I live in a house that I bought back in 2018 or so before things started ramping up. And, you and I are in a very similar situation, Deb. We have pretty nice places we live in, and we bought them before prices got crazy. So as a homeowner, yeah, there's a lot to worry about. And as a homeowner, what caused prices to jump? Cheap interest, cheap money always makes prices go up. I mean, why do car dealers lose money on financing, offering you 1% finance because they can charge more for the car? I mean, it's basic economics. So inflation's made prices go up. Tight zoning has made prices go up here in the Metroplex. The population, at least here in Arlington, the population is very resistant to zoning changes, allowing multifamily housing. Hey, they got to live somewhere. All that forces prices up. But as a real estate investor, I'm just going to be a contrarian, maybe. But I'm going to tell you there's nothing wrong with the market because as a real estate investor, the market is always right. I'm the one that's wrong. If there's anyone wrong, it's me, it's not the market. I misread it. I got a little carried away. I stopped following my numbers. I stopped following my process, stopped using my spreadsheet. You and I have a very similar spreadsheet, by the way. Yours is prettier, but we kind of get the
Simpler.
same thing done. But so as a person, yes, you really got to look at this. It's in a lot of places, including Arlington, it's cheaper to rent right now than it is to buy. That's just the way it is. I just went and did supervise a clean out on a rental house here in Arlington. Ran the numbers like I always do. Do I sell it or do I rent it? I'm going to rent it again, but man, the price you could sell it for and the price you rent it for, yeah, it's so much cheaper to rent this house from me than it is to buy it. But as an investor, there's nothing wrong with the market. It's always me that there's something wrong with.
The market is right. Do you think so, some people think that uh, younger folks have been kind of locked out of the housing market. The millennials or Gen Zs, or I don't know where the cutoffs are, but people younger than me, feel like the affordability, they're kind of stuck being a renter now. Now, one way I think about it is what just dollars and cents wise, you might, if rents are much lower than the cost to own, that you're not really stuck there. You're kind of taking advantage of it. Taking advantage of the fact that that homeowner can't rent their house for as much as their payments are, you know. So I think that that's going on. But it just seems like everybody was waiting for interest rates to go back to 2.5% or something like that. And it seems like they've gone, haven't we had like six cuts or so? And so rates, the Fed funds rate has come down quite a bit. I don't know if mortgage rates really have.
I've got two friends in particular whose job is nothing but interest rates. I have a friend of mine that runs a foundation, a charitable foundation. He's all about interest rates. He's one of those guys that'll do like charitable remainder trusts and stuff where people have money, roll their assets into the trust, and then he gives you an annuity. So he makes his money off the spread between what he can get in the market and what he has to pay you for the market. So his job, shout out to Bart, by the way, his job is to know what interest rates are doing. Then I've got a really good friend of mine. I've known him since the 90s, who's a mortgage broker and a good one, a high volume. Shout out to Brad Boswell. His job is to know interest rates, and they'll both tell you the same thing. I don't know. Beats
Yeah.
me. But after you get past the beats me, they both kind of say, look, if you take and chart this out over 20 or 30 years, 6% for a 30-year mortgage is kind of normal. And it's kind of normal for a couple of reasons because it's not so high that it takes you forever to build equity, but it's not so low that it inflates the price of a house. So I don't know, but people seem to think this 4 to 7 range, maybe 5 to 7 range is about normal. I don't see two coming up anytime soon.
Yeah, 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 right, right. But it seems like what screwed us, if anything did, was the cheap money. And it wasn't just in real estate. When you could borrow at just 2.5%, like look, you could borrow money to buy Bitcoin, you could borrow money to buy gold, stocks, real
Whatever.
estate, commodities, anything. All asset classes over the last few years were just being fueled by this cheap, cheap money. It seems like
Cars,
it seems
everything.
like less a blessing than a curse to a degree.
I just tell you from my own personal experience, we did, as you well know, Deb, we did hundreds and hundreds of houses in the last 4 or 5 years on the cheap money thing. And we made good money. And I'm not complaining. And then the cheap money dried up within a month. We've never seen rates jump like they did. And
Right.
we've seen rates this high. We haven't seen the acceleration. And man, did that shut the market down. And it taught me a lesson. It hurt a lot. A lot of us that had a bunch of houses in stock, all of a sudden we were stuck with them. And why were we stuck with these houses? Because I had a 3.22 in Abilene, and before rates jumped, the mortgage would have been about 1450 a month. After rates jumped, they were about 1900 a month.
Wow. Yeah.
That's a car payment right there.
Right.
That's a car payment.
Right.
So you know, low interest gives, low interest takes away.
It does seem like it takes asset values a while to normalize. Like if you had 2% money and all of a sudden the money's 5% or 7% or something like that, um, the asset doesn't, I had a conversation with one of the viewers, a guy named Sanjeet, really sharp guy. And he brought up the point. Um, I said, well, rates might fall next year. He said, but, doesn't that cause the asset value to go up? If, like they have rates go down, values go up, equilibrium. And I pointed out to him that I thought they had become disconnected, and that what we had now is high rates and high asset values, and we were kind of stuck there, and only like it's like a game of standoff or whatever, where the homeowner is saying, "No, I want what my house was worth in 2023,
Right.
2024."
And here's why you say that, Dev. You say that because of the affordability thing. So Sanji's right. There is a linkage, cheaper interest, higher price on whatever you're using a cheaper interest to buy. That's just science. It's a teeter-totter. He's right. But you're right in that a house is not IBM stock. See, IBM stock, what's it worth? I don't know. It's whatever the market makers say it's worth. And how much are you willing to pay for IBM stock? Nobody knows that either. What's our projection? What's the trend lines look like? It's different than a house. I got to live in a house. Or if I'm not going to live in a house, I've got to rent the house or I'm going to sell to someone who's going to live in it. The point is there's an affordability problem. With IBM stock, am I willing to pay 50 bucks a share? Well, today, of course I am. Am I willing to pay 500 bucks a share? It depends on my perception of the market. I don't have to have that IBM stock. I don't have to have that Bitcoin. I don't have to have either
Right.
physical gold or gold futures. I got to have a place to live, and I can only afford to pay so much. So that's where your argument comes in is we've hit that affordability cap. And that affordability cap that I referenced earlier is super simple to look up. In fact, National Association of Realtors publishes these numbers every month for every market. Median home price, median income. What's the spread? There's your answer.
Hmm. A lot, if we go back through a lot of these videos looking at the 49 or 50 or more houses, that we've seen. One thing that I noticed was when I go down to like the Zillow price history, I'll see 2022 to 2023 was a peak. And then if I'm talking Houston or Austin, I see it falling off that peak. If I'm talking DFW, I see it coming off the peak and leveling. Like I don't see DFW like my own personal residence. It kind of spot mine had a weird spike at the beginning of this year. It was probably its highest point, kind of a weird timing. But so it seems like in DFW, when the rates hit, it kind of killed the party, but it didn't kill it all the way. It brought it down a bit, but then it seemed to level out. It seems like and now it just seems like everybody's waiting for rates to save the party.
So I think you're right. So first off, I'm just going to throw this in there because my feelings on AVMs, automatic or automated valuation models, or Zillow or Redfin or Realtors got one. My problem with these models is I don't know what the algorithm is, and neither does anybody. But on the other hand, they tend to be pretty accurate in a homogeneous area that's densely populated, and they tend to be
I
pretty
agree.
inaccurate for non-homogeneous properties. So if you're looking at a 322 in central Arlington, they're going to be within 2 or 3%.
Right.
If you're looking at a house on Lake Arlington here, just a few blocks to the west of me, it's not going to be so good, but it doesn't matter. Your point is well stated. So numbers came out this morning that I was reading in an article about 5 o'clock when I usually wake up. 80, I'm sorry, 53% of all metro areas in the United States have lower home prices this year than last year. And I'm sorry, I take that back, not 53% of all metros, 53% of all homes that have a track record or a history that can be measured through Zillow, Redfin, MLS, or whatever, have seen price declines, not metro areas, 53% of all homes.
53% of homes. Yeah.
In DFW, it's 87%. Now, I'm not saying it's a serious decline. In DFW, it's 4% year over year, which is kind of steep, but not super steep. But the point is, yes, we have seen price declines. And yes, it's different in Arlington than it is in Grand Prairie. Not a lot, but a little. Certainly different than Watauga. This house we're getting ready to look up, I was a little surprised at the days on market and the values are holding better in Watauga than they are Arlington. I can't
Yeah.
explain it. I'm not going to argue with it. The market's right. Somehow people like Watauga. But yes, it is very different. And you have the ear. Dev, you talk to people all over the country. You've got We Buy Houses licensees and office holders, coast to coast, border to border. You know what the deal is. Some metro areas like Milwaukee, Cleveland, and others, Memphis, Birmingham, Alabama, have got a really good market right now, and I mean, it's really good for investors. And some markets, it's just a little tight. That's the way it
Yeah.
is. And what you've seen is exactly what I've seen. The differences between Houston and DFW, for example, is exactly as you described. But compare that to Austin, you'll see more of a pronounced spike and more of a pronounced drop. Again, real estate's local, which is what makes real estate fun, which means these national statistics are cool and interesting, but it does me no good when I'm trying to buy a house on Cooper Street in Arlington.
Yeah. Yeah. I think the other question that's probably on people's minds, particularly, if they're in the business or if they're thinking about the business, perhaps they found these videos because they're interested in doing this for a living. Um, and if this was 6 years ago, in hindsight, we would know we were headed into one hell of a run, right? Really, since we started We Buy Houses in 2013, it has been one heck of a run, just up and to the right. Um, and it kind of reminds me of the stock market. Like if just look at S&P or anything, just up and to the right. And it just seems like all these things ultimately the uh the what is it? The chickens have to come home to roost or whatever. Um,
Well, in any
that,
other market, it's natural to have a pullback, right?
yeah,
I mean, in if you're trading crude oil futures, if you're trading the dollar yen currency pair, if you're trading IBM, the Nasdaq, the S&P 500, it's just natural to have a pullback to some area of support, and then that area of support may hold or it may break, and if it holds, back up we go again. I mean, that's just the way it is. Houses aren't that different. It's just that in the past, and I've been doing this since 92, in the past, the appreciation has been about 4% a year here in DFW. This 10% a year stuff has been unusual. Some years been 1%. So when there was a rise, it was pretty gentle. When there was a pullback, it was pretty gentle. It just isn't that pronounced, but it's natural. And I know we haven't got there yet, but when we get to that discount factor, that's that's your answer. If we're in a
yeah.
falling market, that's fine. We'll just buy cheaper.
Let's go there. I think, see, this is what I was kind of getting at. I got a little bit off my point, which was if I'm thinking
Sorry
about
about
being in
that,
this
man.
business, it happens when you're old. Um, but thinking about, this business, should it be a good time for people to kind of ramp up to do it, or should they be waiting for something to happen? Rates to come down, values to drop, uh, what should our mindset be going into the next year? One of the discussions that you and I had was about the discount factor. Anybody that's watching the videos knows I use a very typical model. It's the ARV, after repaired value, times 70% minus the repairs. And this is kind of what I teach because this is the basic construct of a cash offer. But it's really dependent upon, how you calculate the ARV, how you calculate the repairs. There's a lot of art that goes into both. But the discount factor is really what we say. If the house was in perfect condition, times 70% minus repairs. Now, you and I have talked a little bit about this, that in a market where everything's going up, 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 up over time, the discount factor actually creeped up. Like I saw people, I was getting knocked out of deals right and left because if I was at 70%, there were people paying 75, 78, 80. There was open door out there offering, 82. So I don't know. And you're just like, I can't even play this game if people aren't going to follow the rules.
Well, and you
But
know how much Open Doors lost, right? And you
well,
know how much Redfin's
yeah.
lost.
Recently
Zillow.
had a bump, but after
Yeah,
losing 90% of its value, right? It became
yeah.
a meme stock. I don't know if you realize that, but it
No,
had a
I know it.
little it
I'm
had a
telling
little
you.
meme stock run from like $2 to $6. It did it was it was just like a dead cat, bouncing. Yeah.
Wait, here's so you taught me well, Dev. When I'm ballparking a house, I use 70% as well. But you are right. Homeowners insurance or investors insurance, property insurance, costs of capital, holding costs, utilities, these all cost money. So here's my matrix. And my matrix is based on the estimated hold time between purchase and sale,
Hmm.
which includes repair time, it includes time days on market, and includes closing time. So, time to close. So typically, at least the way I do it, the way our crews do it, is every $10,000 worth of work on a house is about a week. So if I need $60,000 worth of work done on a house, that's about 6 weeks. And then days on market is what it is. This house we're getting ready to look at, I believe the median's 27. So let's say I need to spend 20 grand on a house, which is not much. That's 2 weeks plus another 4 weeks. That's 6 weeks. Um, and then 30 days of close, you know, takes it up to 10 weeks. So the way I do it is if I'm going to hold a property, and I got to look at my spreadsheet here, so I'm going to look off screen, but
Sure.
so my spreadsheet is broken down a little more refined. If my total hold time is going to be greater than 180 days, which I've had a few of those where it's big houses. Just did one in Princeton not too long ago, and it took a year to get this thing ready to go. My discount factor is 50%. 120 to 180 days, it's 60%. 180 to 120 days is 65%. 60 to 90 days is 70%, which for modest repairs is right where you want to be. And then 30 to 60 days is 75%. And then anything I would churn in less than 30 days, which has never, ever happened to me, ever, except when I wholesale the deal, is 80%. And I built that the way it is. Well, look at your cost of capital. I believe
Yeah.
it's wrong to put your own money into a house. I believe you should go find a hard money lender, a private investor, something like that. But if you do use your own money, which I strongly urge against, but if you do, pay yourself interest, man. Pay yourself 1% a month. Well, 1% a month is easy to calculate, and that's the going rate for hard money right now. So pay yourself 1% a month. Your utility is going to cost you 100, 100 and a half a month. Your taxes are going to range wildly depending on what state you're in. But, let's just say your taxes are, 2,400 bucks a year. That's 200 bucks. I mean, it all adds up pretty quick. Insurance is going to cost you, about the same. Depends on who you use. So I cover the holding costs by changing my discount factor based on how long I think I'm going to hold the house. And that's actually worked really well for me. The only time I've ever gotten into trouble is when I got a little sure of myself. Oh man, this thing will sell in a heartbeat. I know the days on market shows 27, but these houses are going in 7 days. I've seen them. No, I haven't. It was in my head, which brings me to my most important point. And I feel really fortunate that I have a bit of a background in trading, stocks, currencies, commodities, whatever. And I have rules. So in real estate, my rules are on my spreadsheet because I've carefully thought out my rules for buying a house. As have you, Deb. For 50 episodes, we've seen your rules to buy a house. And when you carefully think this out, you don't have to worry about forgetting something. Your spreadsheet is your checklist when you walk the house looking at it. Your spreadsheet is your checklist for taking pictures. So you can go back to the car or back to your house or your office and analyze these pictures, make sure you didn't miss anything. The spreadsheet is your rules for your discount factors. Spreadsheet is your rules for your ARV because it's proven fact. There's been a lot of studies on this. When you follow your rules, there is no predictable percentage of wins versus losses, but 75% is a good average in stocks and currencies and commodities. But when you're guessing and not following your rules, and this is important, you would think you'd have a 50-50 shot of being right or wrong. That's not correct. You're wrong about 75% of the time, and you're right 25% of the time. And the question is, how can that possibly be? I don't know. They've done a number of studies on this. Things as simple as doing a coin flip, guess heads or tails. And if you randomly just start guessing heads or tails, you'll never break 50%. So for that reason, I follow my rules, just like you follow your rules, Dev. And because of that, if prices are falling, I will see that when I run the comps. When I run the comps, 90 days back versus 180 days back, I will see those prices falling. And then I'm going to go on the lower end of my ARV just because that's the truth. Why are home prices falling here? I don't know, but they are. I'm not going to argue about it. Likewise, I don't guess on days on market either. I look at that. What does the market tell me? So I believe that 70% thing, which is a good rule, that's golden. But 70% for me is on the high end. Usually I'm a little lower, depending on the severity of repairs needed to the house and how slow the market is.
Look, I like that you broke that down because I think one thing that's really not articulated in my simplified model, what I've tried to do with my little cash offer calculator is provide a model that covers all the bases of the rules, and but simplifies the process. And I think of my repair estimator as almost like sliders. Do I need
Yeah.
100% of cosmetic or 50? Do I need this much of air conditioning or whatever? But yeah, just basically, following the rules of the spreadsheet What I don't have in my rule set really is anything about holding costs. And I think to your point, holding costs in my model have been accommodated in the discount factor because, sometimes people say, oh, wow, you're going to 70% of, ARV. Wow, that's a, huge discount. It's like, it's not what you think
No,
because
it's
it's got to
not.
cover a whole lot of things.
And and I've been using the same spreadsheet since 2013 or 2012. I mean, I've adjusted over the years, but it's the same spreadsheet. And I'm telling you, I've done a lot of study and I've wrapped up my holding costs in my discount factors. So I
Yeah.
don't break it all out like some
Okay,
people
well, that
do.
makes me feel better
Yeah,
because
and I know, look, you buy houses. I know how you buy houses. You'll use this 70%, just to ballpark it. Is it even worth me diving into? And if it is, then you dive into it and look at the market numbers and what's the actual repair costs and what's your length of hold. I mean, that's how you buy a house. That's how I buy a house. I mean, you're going to look at
yeah.
for every 100 deals you look at, you're probably going to go visit, 30 or 40 maybe. You're not going to go visit 100.
Yeah. So, well, it does. Yeah. Like I said, that does make me feel better because I was kind of feeling like it's something from an educational standpoint I haven't talked a lot of it about, but there's really two dynamics here. Uh, Maybe a little redundant because I did speak to this earlier, but if the market's going, up every month, houses are selling, same house selling for more, then you did offer a little too much, but no big deal because while you're fixing the house, it actually went up in value.
Yeah.
But if you're in a market that's actually dropping, and it's not like Tesla stock, this is usually, relatively minor, but you start to see, the prices decreasing a little bit and the holding times are going up, that's really a point where we might want to go to a 65 or 60% discount factor, you guys, because you got to account for that. And I think a lot of investors, particularly new investors, one of the things they don't really account for is holding costs. Like they don't think about I've talked to investors before, oh, I didn't realize you had to have insurance
Oh,
while you
it'll
had it.
it'll
I didn't
if you're
realize you
stuck
had
with
to
a
pay
house,
taxes, you
if
know.
you're stuck with a house for 6 months or 12 months, which happens, them holding costs
Yeah.
will eat you up, man.
You are the owner of that
You
house.
are the proud owner. Tell you,
Yeah.
I had a house on Perkins Street, and I just screwed up. It's as simple as that. I didn't understand. I built it into my spreadsheet now. It was one of the first houses I flipped. I didn't understand how badly people didn't want to live on a very busy street.
Yeah.
I don't have kids. I don't have pets. I don't care. I learned. I held on to that house so long. I thought I was going to have to move into it. And the point is that, well, let's just say you borrow 250,000 bucks for the house and repairs. That's 2,500 bucks a month plus another, call it 500 for other types of holding costs, which is pretty minimal. That's 100 bucks a day. Every day you own that house, rain or shine. And
100
once the
bucks a
clock
day.
gets to 6 months, 7 months, now the house has been on the market long enough. It's what real estate agents call tainted. Oh, what's wrong with the house? Then you got to pull it off the market, let everything reset, maybe paint the door a different color, stick it back out on the market again. Next thing you know, years gone by at 100 bucks a day.
Yeah,
And
yeah.
so if you're projecting to make 10 or 15% on a house, that projection's out the window, man. You're lucky to hit break even just for holding costs.
So I want to jump in and look at a house together. I think that'll
Yeah.
be fun. Before we do, I think to wrap this, I'm just going to flat out ask you a couple of your opinions. Uh, Number one, and I realize that real estate is so local that if we were talking about Florida or Ohio or anywhere else, you and I, hey, probably wouldn't know too much because we're not in those markets, right? And we're not looking at their values every day. But as far as Texas or Dallas Fort Worth, do you think that a year from now, home values will have declined? And if so, do you think it's a little decline or it could be substantial decline?
So the area that I pay attention to is for those of you familiar with Texas, from Tyler, Texas to the east to Abilene, Texas to the west, the border with Oklahoma, the Red River to the north, Hillsboro, which is almost Waco to the south. That's the square that I pay attention to. And the answer is yes. We have seen a decline in every city in that rectangle. Not a serious decline, but we've seen a decline. It has been about 4% here in the Metroplex, and it's been a little more than that in some rural areas. But right now, the trend is down. Not seriously down, but it's down. So unless interest rates intervene, I have no reason to think that that trend won't continue. I mean, I see nothing that'll change it. The good news about Texas is we have a lot of, and I hear this all the time. Oh, look at all the people moving in, and it's true. We have almost 400,000 people a year net migration into this state, about 360,000, 380 every year for the last several years. Doesn't even include birth rate. Yes, lots of people are moving to Texas. 100% true. People love it here. I love it here. Why not move to Texas? But I don't care. I just care about the numbers on the screen, and the numbers tell me that 4% decline. There's another FOMC meeting in December. They might drop interest rates a quarter. If they do, will that actually affect mortgage rates, or is that expected drop baked in? We don't even know that answer. Remember when they dropped rates here just a few weeks ago? Mortgage rate actually went up just a little bit because
Yeah, right.
it was already baked in. So, I'm sticking with my numbers. I expect a gentle decline. I see nothing that tells me a crash is happening, but then I see nothing that tells me a boom is happening either. So we just work with what we got, gentle decline. And again, if I'm buying a house to rent, all I care about is annual cash flow anyway. So I'm using a good old fashioned 50-year-old 1% rule. And if I'm looking to flip a house, I stick with the spreadsheet, and that's the way it is. I'll be fine, whether it goes up or
Mhm.
down.
I think for many investors, and I saw it during the boom time. I wonder if it's going on now where people have this FOMO, this fear of missing out. So it's like it's hard to find a deal. Particularly if you're not, don't have the money for lead gen and all that kind of stuff. You're just out there beating the street trying to find a deal. But one of the things that happens and I think it could be investors that are new as well as, say cash buyers who are just trying to find their next rental or whatever, is sometimes when we do find an opportunity, um, we get a little caught up in, I don't know if I'm going to find another opportunity. It may take me 3 more months or 6 more. And
I
then,
can't tell you how many times I've done this, Dev.
yeah,
My guys need work.
we need to keep the pipeline going. I got
Chris
crews. Yeah.
Chris's guys are going to go work in apartments if I don't get them busy, or I need to make another 20 grand for the end of the year. Or I'm telling you, I've done all of this stuff, Deb, all of it. I've personally done. And how many times has it worked out for me? Zero.
But it is like the indicator. I remember the last house I looked at, I didn't buy. It was in Arlington. It was a great house. It was older gentleman and his sisters that owned it. And they were old, but their parents were like, had been like 100. And so the heirs were like in their 80s. Oh, sharp. This guy was the sharpest guy, sharper than me. And I gave him my numbers and we're in the house. And basically, it's the sheet that I'm showing these guys. That is I use a reduced form of that because I show people my numbers. It's like,
Yeah.
I'm not just pulling this out of the air. I'm at 173. This is why I'm at 173. Anyway,
Dev, we live in an educated society. They
yeah,
can go on the internet, find it anyway. I just make it easy for them.
just make it easy. And so, anyway, he eventually told me that somebody was at like, I don't know, 15 or 18 more than me. And I told him, I said, sir, that my number that I gave you was my number. And I'm sorry it didn't work out for you. And if that deal doesn't work out, come back and I think I could still do it, for a little while longer. But, it's that fear. Oh, wow. Almost the competition thing too. I think with guys particularly, you know, like I have one of my worst deals I competed, like the Homevestors guy was like more, and then I got like, oh, well, Homevestors not going to beat me, you know. It's like, and then you end up making a mistake, you know, just to win.
Yep. I've done it, man. You know what? Every lesson I've learned the hard way. And that's why I love that you do these. And that's why I love being on here. Because if I can pass on my mistake to somebody else and it saves somebody else that
Yeah,
hassle, it makes me happy. It's made my day.
that's right. But I think our culminating comments about that will be, hey, no one can predict the market. It's probably not going to crash. Rates aren't probably going to go back to 2% mortgages. So those people that are locked in, I don't know, maybe they're hoping for that loan portability thing, which I don't think is absolutely impossible thing that's being discussed, portability. But and then the last point would be careful of the FOMO factor. Like when you get in the heat of the battle and and you're not sure how long it's going to take you to find another deal to put in the pipeline, sometimes we have to walk away from these deals. And in the last year, I think that's one of the things that was different is homeowners still had a pretty high expectation of value and knowing that it was going to be harder for the buyers to buy it. And it was, you know, my holding costs would be more expensive, cause my offer to go down. And they're thinking, man, this house is worth 2023 prices. And I have to walk away and just say, maybe we'll meet again. Yeah, you know, and when I can help you, but I can't help you here because there's no reason to do this. This sounds so stupid, but there's no reason to do it if we're going to lose money. Now, usually I don't think we know we're going to lose money, or we're optimistic. And you know, and I see that a lot with like the
Well,
wholesalers ARVs. They're very optimistic, but
they are, but you know, here's the thing. Now it depends on where you get your leads. So if you're getting them from wholesalers or you're calling or you get them from the city code violation list, these people are not expecting your calls. They're not your friends. You're annoying them. But if you get leads from, say, WeBuyHouses.com or even FastHomeOffers.com, these are people who want to sell their house. You are helping them solve a problem, especially the We Buy Houses leads that come in. When you talk to these people, they go on the website, they see it, they already trust you. It's easy and quick to become their friends. And indeed, I've made friends with a bunch of people I bought houses off of, which makes it all the more difficult when you have to deliver the news to them. Here's what I can pay, which is why I do what you do, Dev, which is, and here's why. And well, someone sold their house for X. I didn't see that. And I looked at the market. Where is this house and how long ago was it? And, and just, I worked through the numbers with them too. And I don't do it all the time because I learned this from our friend Mike Van Norden. Don't give them an objection they don't already have. But if it's appropriate, one of the tabs on my spreadsheet is a net sheet. If I list your house and sell it as is, here's what you'll make. If I bring in my crew to fix up your house and then list it and sell it, here's what you'll make. And if I buy it outright, here's what you'll make. And guess what? Not always, not always, but generally the numbers are going to net out about the same. But if you buy it from me now, it's just a whole lot less hassle, zero risk. No one's going to, squirrel out on your option period or not show up to closing. And so it does depend on where you get your leads, but when you get your leads where I get leads, yeah, it's easy to become friends, man.
yeah,
It
yeah.
is, which makes it tougher to negotiate
When you
sometimes.
want to
But
help, I think I've almost everybody I've met in this business, they want to help people. Like they
yeah,
don't, we all want to make money. We all need to make money. We all need to make a living, but it's
yeah,
cool to make a living in a business where you feel helpful.
it's the greatest
Right.
thing ever, Dev.
Yeah, it
Yeah.
really is. You know, before we jump in over and look at this house in Watauga, one of my favorite cities, weird pronunciation, but cool, great community for flipping and rentals. Um, I'll just close by saying I had this. revelation. There was a guy that worked with us some years ago. He hadn't been with us for a while, but his name was Stephen Johnson. He was down in Waco, Texas. He built WeBuyHouses.com to a powerhouse down in Waco, Texas, and then I think he kind of exited the game. He thought it was over, I think. But anyway, he had a technique, and I think you guys watching the video might think about this. Stephen, like he owned WeBuyHouses.com in Waco. He was the guy, right? And when he went in and made an offer to someone, whether he showed them the numbers or not, let's say his offer was 168. And they said, I was really hoping for 180, you know? And so what Stephen would do, two things I think that were genius. Number one, he didn't act like he was the boss. He acted like there was somebody back at the home office that he would have to clear this with. And the number two thing he did, which is really what caused me to start showing my numbers, is he said, "Well, ma'am, I use the WeBuyHouses.com cash offer calculator, and it says 168, and I found that it knows it knows the answer." But basically, he would this is what he would do. Let's say he was always planning on maybe 170, 160, 175, let's say, in my example here. He would say, if I could get the guys back at the office to agree to 175, will you sign today? And often the homeowner, he basically say, look, because look, I'm going to look like an idiot if I go out, go to the truck, call my boss, say 175, he agrees to it, and I walk back in and you don't sign the contract. And this, I cannot tell you how many houses he closed like this. And,
I love
and
it.
it
It's
was,
beautiful.
it was all, and it made me realize there's a penalty to being the boss. Like if you're the guy, if you're the number one, you own the company, et cetera, then hey, you could pay 175. You could pay 180. Maybe
That's
you
why
could
my
pay
name is
190.
that's why my name's not on the business, Dev. I tell you, that's a really, really good lesson. And I know the guy that you're talking about. He's been very successful, made his money, and he's retired somewhere.
He made a lot of money, a lot
Yeah,
of money. And Waco was a great market, great
yeah,
market. And I've looked at a few houses down there, Waco, Temple Clan. I looked at one a few episodes back in Copper's Cove. I like the area down there. It's
yeah.
pretty nice. Let's jump over and look at a house.
Yes,
Are you
sir.
ready?
Oh, this is fun.
We're not going to spend a ton of time because the video is going to be kind of long and such, but hopefully there's some people that are hanging out with us. Before we jump into it, I just wanted to say, do you remember, uh, can you see my screen?
Yes.
You can. Back in episode 41, I looked at this house in Arlington on Tanglewood, and
Yeah.
wholesaler said 549. My model, by averaging Zillow, Redfin, Realtor, and Property Radar, I came to 538. And then you did CMA on it, competitive market analysis using the MLS. And you came to 550K with 71 days on market. So it was kind of interesting. I think in that when my model actually was a little lower
But
than
that was
the
a
wholesale.
bigger house
Yeah.
and the area where those houses were, it didn't turn a lot. So
Yeah.
that's where the AVMs don't do quite as well because it was a big house. I was surprised it came in at 550. I was expecting it lower, but data is data. But the 71 days on market kind of
Yeah,
hampered.
yeah, that's
Yeah,
right. 71 days that you're going to be
yeah,
on market for a little while. I also thought this house, I've never seen a house with windows like this. It looked
that's
like a
cool.
prison.
That's cool.
This
My
house
wife
is
would hate it, but it was cool.
this house is very close to me, and I rode my e-bike over there. There were people living in it. The pond, the pool in the back was a pond.
Oof. Yeah, I remember
Okay.
the pictures. Yeah.
So, and there was your CMA, but since you've already looked at the house we're looking at today, is this bad boy right here in Watauga.
Okay.
And as we talked about, Watauga is a pretty good market, pretty good area. Let me show you where it is.
Well, while
There's
you're doing that, I
there's the
looked this
house.
house up in MLS. I'm a licensed realtor, so I looked up in MLS, and surprisingly enough, I've got it right here. The active houses, and there's one, two, three, there's four active houses within a half mile of here. The median days on market is 21, and there are two houses that have sold, and this is within the last 90 days. There's two houses that have sold within I said a half mile, I meant a quarter mile, and the median days on market is 27. I was surprised Watauga is that hot, but 27 days on market is the biggest number, and it's the one I would take.
Yeah, it is. Yeah. That is tighter than I think most of the Metroplex cities. You know, Watauga is a good community for rentals and flips, and so you know, I bought houses in Watauga and always kind of keep an eye out for them. There's the subject property right there. Actually, a more modern house. This house was built
Good looking
in
house.
1996.
Yes, it was 1996, and the tax records. Oh man, my tax record thing timed out, but I believe how many square feet is that thing?
They showed it as 2231.
Yeah, okay, yep.
Zillow shows that, yeah. Whoops. I got off my screen. So that's the subject property. And just for the folks watching on video who don't know where Watauga is, it's just a suburb of, in essence, Fort Worth in the DFW area. It's a very convenient to get into the main thoroughfares. So it's like I said, a lot of rentals up there. I remember years ago I was doing kind of an analysis of the percentage of absentee owned properties in a city, and Watauga at that time had the highest percentage of absentee owned homes in DFW when I was doing that study. It's for
Interesting.
years ago, but it kind of
Yeah.
caused me to zone in on it like, hey, this is a great rental market and one that I was mining, for motivated sellers. And so that's where Watauga is. We always like to look and see where we would shop if we were there. And holy cow, there's a Lowe's and a Home Depot.
Uh,
You can choose which to go to. Chick-fil-A, got to have one of those. Taco Bueno. It's just a
one of
nice
those.
area, completely developed. There's a Kroger down the street. I thought I saw a Sprouts. I think I did. Walmart Supercenter. Look, you can't need. What else do you need? You could live in Watauga and never leave Watauga, and you would be in great shape. That's yeah.
With
I
a
think
bicycle.
my minimum, Joel, is a Family Dollar. Like, oh, there's the Sprouts. There's the Sprouts right there. Sprouts is ritzy, and I mean, and this isn't even a ritzy market, but they got a ritzy grocery
Yeah.
store. But no, if I'm looking at a city like like I was looking at one for the last episode was in Orange, Texas, and you're just trying to find a Family Dollar. It's like show me there's at least a family. Okay, but to quickly move through this, because like I said, I know we've gone a long time, but I thought it'd be fun to do a house together. Is that what I've done is my method where I went to Zillow, and I'm getting, step one, get the ARV. Step two, estimate the repairs. Step three, calculate the offer. Step one in the ARV with my method that doesn't use the MLS. I'm just using Zillow, Redfin, Realtor, and Property Radar. I get a 361 average across those sites looking at them. And then when I put that in, it was kind of crazy that at 162, it was exactly the same number as my average. So that's what I came up with my using the public sites method. Now, did you do a CMA and what would you estimate?
Yeah, just let me get that up here. And
Do you want to share it or just talk about it?
nah, I'm just going to show it to you in the
Okay.
interest of time. But yeah, I came up with, man, it timed out on me, Dev, but I looked at my own comps and I came out at about 375. So you and I are right there in the same ballpark.
375. Yeah. And so, you know what I've seen, Joel, looking at these over the last few weeks is that Realtor is basically core logic. And so that's whatever numbers come from core logic. And then Property Radar, we find because when we get we handle about 200 or 300 incoming leads a week here, and we use Property Radar for markets all over the country to just get a quick AVM, an automated valuation. Uh, and I find it to be pretty good. But one of the things that I've been seeing lately, Joel, is that Zillow is almost always under everything else now. It's almost like Zillow went really conservative at some
Mhm.
point, and I now often see this. But
Just before you go on, the biggest thing in this market is there are more houses for sale than have been sold, not by a lot, but by a little bit. So there's a little bit of an imbalance, but nothing to be concerned about. Fast moving market. I'm looking at one here on Stone Ridge Drive, 379, and it's pretty nice. So yeah, your ARV is right on.
yeah, and so if we look back at what the wholesaler was saying, 365, in this case, and this is what I see quite often with this wholesaler Fazio, is that, sometimes their ARVs are kind of pie in the sky, but quite often I find them to be pretty rational.
Yeah, I believe
And
that.
the other thing I like about them as a wholesaler is they do this where they cover kind of the top five: roof, HVAC, electrical, plumbing, and foundation. And they're, short of going out and looking at the house to see if they were honest or right, I do find that they will say do your due diligence on the things you probably need to have a concern about. And so like on this one, it appears that it's the roof. But let's for fun, let's jump in and look at what we have here. Let's
Okay.
look at the photos. And we'll kind of move like I said, pretty quickly through this one, but there is the property, the subject property. One of the things I noticed, Joel, right away with properties is just exterior lack of maintenance, which often translates into interior lack of maintenance.
Always
For
does.
example, no edges on the sidewalks, no, the paint on the shutters, being old and, that kind of thing. Or say paint around the edges of the house that isn't very good. Kind
Yeah.
of sometimes an indicator of what you're going to find on the inside. Do you think so?
Always an
Yeah.
indicator.
Um, Same thing, messy. Don't know what that thing is growing in the front. It's always nice to have a big green bucket out in front of your house. I think
Yeah,
that
it is.
it's just class.
Which means the garage is so packed full of crap you can't get it in there.
Okay, we're going to start to discover a little bit of a problem here. I did sneak a little peek, and this was the image I saw, but do you see that crack down there?
Yep.
Yeah, that is indicating some foundation. Now, the wholesaler said foundation, no known issues, but um here you can't tell very much from that blurry photo. I did one this more. Oh, better. This is actually the picture I saw uh,
Yeah.
when I cheated and looked ahead. But yeah,
It's
that's a
clearly a stress
concern.
crack. Not serious, but it's a crack. It's probably minor, but it's there.
Yeah.
And
Well,
everybody's phones these days has a built-in level on them, or at least most people's do. So if you're questioning whether a crack's new or old, just hold it up to the wall to see if the wall's level. And not on carpet, but any place you find solid floor, just lay it on the floor and just see if it's
yeah,
cattywampus.
that's a good point. I walk into houses with a level. I
You
can
can,
sit on the wall or the floor or whatever. The other thing I kind of look for is just, anything with the exterior, the brick that looks, out of the norm. There's something that maybe was a repair and, that window looks a little kludgy, but it's hard to tell. I did one, the last episode, the pictures were screen prints off of somebody's telephone. So
uh,
while these aren't the greatest pictures in the world, they're so much better than that. But
they're
here
good enough.
again,
Yeah,
yeah, here again, we start to see, a little bit more of this stress fracturing.
yeah,
And it's not just the mortar kind of trace that you sometimes see. It's actually,
right through the
cutting
brick.
through the bricks.
Yeah.
Yeah. And as we start to go around, look at that.
Yeah,
There's there's quite a bit of this.
so you'll need a pier every 6 feet. Each pier is going to cost you about 400 bucks.
Yeah, yeah.
Just start stepping it off, and just see how many piers you need on those two walls.
Hmm. And how do they know if it needs to be leveled in the middle of the house? You know, where I guess they're just going around and checking all the,
So the middle of the house, you can usually see that by diagonal stress cracks in the drywall and just doors that don't shut. But the middle of the house usually isn't where the failures are. It's usually around the edge
yeah,
anyway. And
yeah.
you start to see weird things like big gaps in doors and the walls pulling away from the ceiling. It's
We,
noticeable.
this house was built in 96, so it's 20, so what is that? 25
Yeah,
plus 4, 29 years old.
great house in
Uh,
a great neighborhood.
Probably, I think those might be the original windows.
They
That's an
are.
interesting little piece of trim right there.
Yeah, those original windows. I love this place so far.
Yeah. It's got a fence that needs some repair, some shutters. Yeah, you think those are original windows in that thing?
Oh yeah, I'm positive.
Yeah, me too. Yeah. Look, there's another one of those cracks. Boy, that is the idea you just level it and kind of hope these cracks close up.
They usually do. And, if you see brick houses that become painted, that's one reason why, because after you
Hmm.
seal those cracks back up, they don't ever quite
Never quite
match.
looks the same.
I just put some white paint on it, call it good. But, the good news is in Texas, many houses have foundation issues. And once you fix them, if they're fixed right, the house is actually more stable than it was before. So
Yeah.
foundation's a great thing for us that are buying distressed properties. It's a wonderful thing. Because
Yeah.
honestly, if I'm going to sell a house, I'd just as soon do my own foundation on it.
Yeah. That's a good point. You also had really good crews for that. So you weren't having to, it was, you had experts ready to work on that kind of stuff.
It helps.
Get a little peek at the condenser, got a
Yeah,
electrical
underground
company.
utilities, that's nice. AC is old, but I'm sure it works.
Oh yeah,
Probably.
yeah. Yeah, it doesn't look horrible.
No, it's a Ream, I think, right?
It's a rude.
Rude. Okay, that's a good brand.
Yeah, that looks pretty good. They said no known issues, and if you look at here, this is what I often say about to the wholesalers. Check this out. This is what we want.
This is a good
Give
wholesaler. I
give
like
us
this.
as much information as possible
Yeah.
so we can see. Yeah, these guys are super good. Fazio.
I give them brownie points, man. So
Yeah,
that's a 9-year-old AC unit. It'll be fine.
yeah. I think they're one of the best. Crack came right out of that
Yeah.
interface to the house there. It's a little cracked up like an egg.
So here we've got some the AC for the upstairs. The drain tube's plugged up, so the overflow is coming down the wall. That's what
Ah,
that's an AC issue there.
it's ruined that wood.
Yeah.
Yeah, and discolored the window. Wow. You think somebody would pay attention to that?
Yeah.
Something's not quite right. Outside
Bye bye,
storage
shit
thing. I
going in the
always point
dumpster.
out my belief is there's no value in anything like that, but it's convenient. uh, so it's interesting that their email said it was the roof that there would be some concern about. One thing I often mention, Joel, in the
Doesn't
videos is
look
that
bad.
but isn't it difficult to tell much about a roof from the photos? I mean,
Yeah, it is. We have a drone that we fly, but you can kind of tell by how thick, the granule loss is how you determine how old the roof is. And, you're guessing. I would guess that roof's probably 15, 20 years old. If you're going to sell it new, then yeah, to a new homeowner, it needs to be replaced. If you're going to keep the house and rent it, and you leave it on until she leaks.
yeah. All right. A tree, a backyard, a blurry picture. I'm trying to get in. See, that roof there doesn't look as
That's a little beat
pretty.
up right there. Yeah.
Yeah. Yeah. Yeah. Well, they covered that. Okay. We're in the
Yeah.
house. Got some carpet, got some
Color
popcorn.
coordinated, baby.
What's that?
Color coordinated.
Yeah, yeah, very color coordinated.
Yeah, classy.
Not the worst.
Nah, it's not the worst.
How, I've done this depopcorning a few times. Do you think it's important? Like when you go to sell a house,
Yeah,
should we get that popcorn out of there?
people hate it. And you know what? The flooring probably has to go anyway. You know, you got to repaint the whole house. You're going to make a mess. Just get it off.
Yeah.
Just do it. Just do it.
I'm not a fan of the popcorn. It's got, well, it's a newer house, so it's got modern doors. We've seen
Yeah,
them. They're just,
nice doors.
yeah, trim looks nice. Wall looks nice.
Yeah.
Not necessarily a color I would choose, but it's not offensive. And
So far, it's better on the inside than I would have expected.
bathroom looks nice and clean. We didn't see in there. Oh, I like the volume of that.
What the heck?
That's pretty
Huh.
cool.
There's a
This is
lot
where
of brown, man.
you drop things on your brother and sister from up there.
Cool.
You can probably hold that, like in a battle, you can hold that position better than
You
something
can.
down there.
It's funny.
Okay. They got a lot of that carpet with that design in it.
Yeah.
You don't see that very
You
much
know what, though? This is
anymore.
not in bad shape. I mean, you
It's
want
not
to
at all,
paint it
is it?
anyway. You're going to paint it anyway.
Yeah, yeah, yeah.
This is not bad.
It actually looks
I'm digging
pretty.
this
Oh, look at
house.
that. Heck,
Okay.
this one's super nice.
Zoom in on the countertops. Are we okay? We're dealing with Formica here, aren't we?
Yeah, it is for Micah.
Yeah,
Yeah.
that's fine.
It's
Appliances don't
very
look bad.
clean. A little bit of defect there, but it's very clean for old Formica. But man, imagine how nice this would look with a countertop and backsplash, and you you could just the cabinets look pretty nice.
Yeah.
I like
I'd
them.
paint those and just move on, man.
And they went gray on the walls in here, pretty standard.
Doesn't matter. They're getting painted anyway.
Yeah. Dining area. Yeah, yeah, yeah. What do you think about that floor? What are we dealing with there? Just
Do it all.
do
It's
it
it's
all.
going to look, it's going to look worse in person than it looks on the pictures. You've already got carpet needs to be replaced. Carpet's okay upstairs, but mismatched flooring downstairs, nah, just LVP and off you go, man.
The other thing that we haven't seen in here is cracks yet. Like evident, like we saw all those stress
Yeah,
cracks in the brick facade that well, there's one
there
little
you go.
bit.
Yeah.
Not that
Okay.
bad though. Not that bad. I don't know what's happening right there, but you know,
That's a shot of the ceiling.
yeah,
Yeah, I don't get it either.
yeah. And laundry room looks good. Everything looks fine.
Yeah,
And rain, is that a water softener?
I guess. I don't know what it is. They're proud of it.
Yeah. It's water softener or it's not a tankless water heater, is it?
I don't think
I
so.
don't know.
There's
And there we
water. Oh, we
got
got gas.
yeah, we got gas.
Yeah,
Got us a pan under
got
there
pan. You bet.
for when it springs the leak. Um,
And it doesn't look that old.
it doesn't. It looks pretty good. Yeah. In fact, do they show
Looky
us?
there. Yeah,
Look,
who is this wholesaler? I like these people.
dude, I hope that I hope they're watching my videos because
Yeah.
or anybody that's a wholesaler, I praise this kind of thing because we can, with a serial number, with this information, we can determine a lot.
If
Model
you're a
number.
wholesaler and I'm buying a property from you, you've made me your fan
Yeah.
because it appears you're not hiding anything from me. You even zoomed in on the cracks. This is
Right.
great job by this
Right.
wholesaler.
Right. Okay, here are some issues.
Okay, I bet this is related to the upstairs AC, which is related to that rust stuff we saw on the wall outside. I'm not going to blame us on the roof yet.
Yeah, that'd be interesting if they blamed it on the roof.
Let's see if we have any attic
Yeah.
picks, which I doubted. Most guys don't go in the attic, but I always go in the attic. Attic is where you determine the health of the house, find out where that upstairs AC unit is, and I bet it's right there.
Yeah. Yeah. In fact, I think that last house I was telling you about, where I had to kind of walk away, he had a plug condensation line upstairs, up in the ceiling. Exactly that. He put some money, he or
That's a
she or
water
they
softener. Yeah.
put some money into that. They must have the
Yeah.
softest water
Man, I need to
anywhere.
buy this house, take that out, and bring it to my own house because you know that water softener is not going to help you sell the house, but it'd
Yeah.
be fun in my house.
Hey, at least it's not solar panels. Um, looking at,
Yeah.
hey, we even got the label on that thing
Yeah.
and get a look at the panel.
200 amp breaker box. Looks
Yeah.
good. Kind of
There-
label. Good enough.
I know there's one that I'm blanking on the name of it. An old box that when we'd walk into a house and see it, we'd immediately know it needed to be replaced.
Yeah, I don't remember the name
Can't
either.
remember which one that was, but the other thing that I find interesting is whether they're labeled or not. Yeah, kind of. It's definitely nice if they are. Uh, Interesting combination of popcorn brown and blue.
Hey,
That looks like a closet.
it's America. You can paint your walls any color you want.
Pantry. Again, I do like the walls, the doors, the trim.
We don't have to replace these doors.
All looks really good. And the colors are non-offensive. They replaced whatever this size was with this size.
Yeah.
They've got a modern,
But that's the thing most people don't realize. I don't care what the color is. It's getting painted anyway. And
yeah,
I really don't care about your floors or getting covered
yeah,
up anyway. I don't care if they came in there and graffitied the place. Doesn't matter.
yeah. I
That's
like
nice.
the kind of coppered ceiling and
Yep.
not a huge fan now as we think about repainting it. I know when we go into a lot of homes, one of the ways that people have personalized them over the years is they've chosen their own paint color.
Right.
And sometimes it's like this cowboy's blue. In general, you don't want that dark color, do you? Or what do
I
you think?
Yeah, so here's what I do. I tour new houses, whatever the new houses are doing, I'm doing, especially the houses made by the big boys, D.R. Horton and the Pulte and those guys. They sell thousands of houses. They have departments and people dedicated to finding out what the home trends are, and that's what they do. And that's how I pick my colors. That's how I pick my countertops, how I pick my light fixtures. It's what they're doing. And it changes about every 4 or 5 years. And right now, off white, I wouldn't personally paint my house off white. I think I'm living in a Soviet hospital. But hey, we're doing a house in Mansfield this week, and it's off white. That's Look at a new house. That's what they're doing. That's what I do.
You mean they're not going beige or gray, they're going off-white,
Yeah,
eggshell.
right.
We just call it eggshell, I
Yeah, it's
think.
a little more creamy white, off white,
Oh,
but
really?
yeah, yeah,
Okay. Yeah, look, I think neutralizing is a good idea because
you
then people aren't coming in and going, "Oh, I
can't
don't
do
like the paint
this.
color." If you
Yeah,
come in and it's off white or it's gray or it's beige, you're not coming in and going, "Oh, I don't like that color." You're just saying, "Oh, that's what it is," and
and it makes it
Okay,
look bigger.
we're
Light colors
done.
make it look bigger.
We're done with the pictures. One of the things I have suggested to the wholesalers that watch my videos is that they should number the and name the pictures like 001 front entrance, 002 main living,
Agree.
zero oh 003 kitchen, and then it would force them into an order that as we look through them follows some sort of layout, a sense of layout. The other thing that I've seen some great wholesalers do, including Fazio, which probably mostly Fazio, is every now and then I get a video walkthrough. It's so easy to provide that. Um, Everybody has these cameras in their hands now, and I'm amazed when I get a house and I look at it and the pictures are like look the one I had in the last episode. The pictures were screen prints off the cell phone.
Yeah, that's not
You
good.
know how to get the images off the phone, so they just screen printed and emailed them, I think, to Fazio. But anyway, I think that there's a lot they can do to make it more like a presentation. If we jump back into the model, Joel, I feel like um, this does need some foundation. Like they didn't say anything about foundation, but
It's
oh, they
obvious.
did say do your due diligence. I missed that.
Yeah.
So, like, as I come into my model, the way my model works is I've just got, oops, let me move this, some variables over here that can be changed depending upon the market, like $10, $6, $7, and it just applies to the square footage.
Mhm.
So, I found that it's pretty close. So, if I do, one for a foundation, that might be a little high because
It won't be that much, but you know what?
it's a pretty good sized house.
We're
So,
not
we can
doing a
do that.
physical inspection of the house where we want to really get granular. We're just making the decision, is it worth a trip to Watauga?
Right, right. That's exactly right. And so I think
In
cosmetic
fact, if you see a black Jeep flying down 820, it's me going to Watauga to look at this house.
um if I just said, "Hey, we're going to paint and
That's about
flooring
right.
22," does that
Yep.
sound about right for you?
That's yeah, that's really good. Really
Yeah.
close.
And then last, generally if it's just looks like it needs to be prettied up, I'm going cosmetic. If it looks kind of beat up, I'm going cosmetic plus just a general repair category.
But that'll
Now,
cover, flooring and sinks and countertops and stuff. So yeah,
yeah. So now I think in this case, if I was doing this without you, I probably wouldn't
25.
slide the slider all the way over to 100 because I think the house was in pretty good shape.
Agreed.
And I might stop around there. Like you said, and what I always say to you guys that are watching is that this is what we're doing before we set our eyes on it to figure out, a ballpark of that might be, hey, well, for one thing, I'm looking at is when I throw a bunch of repairs on here and I'm at 206, I go back and I look over here and say, what do they want? They want 183.
Well, we forgot to put the roof in there.
Oh, forgot to put the roof in there.
That'll
Sorry.
take
That'll
it
that'll
down to
get us
about their
closer to
price.
the answer.
Yeah,
190,
yeah. We're,
15K on a
we're in the
roof.
ballpark, and I'm going to dial this into my GPS.
Yeah, honestly, this is probably worth looking at. That's a legit 50% off ARV.
Yes, it is.
Uh, yeah. All right. We're going to cancel this episode. We're not going to show this to the people out in the public for at least 5 days. And that Arlington house, I did get the money together for that house and I was too late.
You told
Uh,
me it would sell. I was dubious, and you were right.
yeah, dude, for you guys, it was the one that we were talking about at the beginning on Tanglewood that was
Yeah.
around 550
But
ARV.
but this is great because wholesalers provide a valuable service. Because here's the issue: whether I'm buying leads from Fast Home Offers, or whether I'm putting up 100 websites, or whether I'm buying a license for We Buy Houses, or however I'm marketing, it costs me money to get leads somehow. So wholesalers provide that service, and here, man, we're our ARV is conservative. Our repairs are right on. Our days on market justify that 70% discount. Um, man, I'm making you my wholesaler.
It looks like a pretty good deal. I just
Yeah.
went full 100% on the general repairs, and that brought it to that 183. And you can see, Joel, that gives us almost $70,000 to come in
And
and
you
do
know what?
repairs on this thing.
We'll probably use it. I mean, we can use the detailed spreadsheet, but by the time you put on new vanities, new countertops, new sinks, you're going to do new light fixtures, ceiling fans. It's tough to walk out of a house that big for less than 50 or 60.
Yeah, yeah,
So
I agree.
we're good.
Well, I think that's it for this one. I like this house. I like this deal. I think we should wrap and go meet out there and put some eyeballs on it.
That's what
But
I think.
that'll be it for that today. And I'll just let me stop this share, and I'll kind of just wrap this up. Joel, I do really appreciate you coming and giving these folks somebody besides me to listen to. Somebody that's done this a lot more than I have, quite frankly, and I really appreciate your expertise. As you think about, we've got folks in the audience that are, either wholesalers or looking at this opportunity in 2026, thinking about, hey, I think should I get into this real estate business? Or we may have, I hope, cash buyers who are trying to figure out how to find properties, for a rental portfolio or, whatever it might be, just for their real estate business. Do you have any closing thoughts about 2026? Where's your head at as we think about the year ahead?
Well, as I said, trend is pointing gently down. I have to go with the trend until told otherwise. And for me, just for what I'm personally doing, I am sticking to my rules and sticking to the numbers better than ever. Yes, I deviate sometimes, and yes, I pay for it, but I'm just sticking to my rules, and I can't stress hard enough. Stick to your rules. And you know what, Deb? People know how to get a hold of you, and they can get a hold of me through you. But if you need help developing your rules, I mean, we're here to help because Deb and I talked about this. What's the purpose of withholding the magic sauce, if you will, the magic ingredient from 30 years of investing in houses? And the answer is there's no advantage in holding on to that knowledge because if we're competing against people who are properly and fairly bidding on houses, then we have a fairer chance than if we're bidding against people that just pay too much. And so our motive to keep you from getting burned actually helps us. It actually helps us. So no, I'm sticking with the numbers. We'll see what happens in 26. In Texas, the economy is generally healthy. Uh, so I'm going to stick with my flat, flat, flat. I'm just looking at everything flat. Rents are flat. Housing prices are flat. Interest rates, who knows? You tell me.
Yeah. Yeah. Awesome. Well, thank you so much again for your time and for your expertise, and maybe we'll do this again. I think it is really nice to and fun to do it together with somebody, and kind of helps me rationalize my thoughts a little bit. Am I looking at this the right way? And like that deal today, I was kind of unexpected. I didn't know that we would come to the end of the video and go, that looks like a winner. I want to go look at that. And since I lost that Arlington deal by procrastinating, maybe that I need to get out to Watauga. All right. Well, hey guys, we're going to wrap it up right here. Thank you for joining us today on episode number 50. You can go to cashoffermasterclass.com, click on the Get the Calculator button. We'll send you that calculator. And you can always search on Google or YouTube for Cash Offer Masterclass. You go right to the content because there's only one Cash Offer Masterclass. And so with that, we're going to say goodbye. I'll say goodbye to you guys. Joel, we'll see you later, buddy. Thanks so
Yeah,
much.
man.